would like to talk about relative strength index, RSI Lite. Now this robot is going to measure the momentum of the markets to know that later it's going to be upside move or a downside move. Okay, in simple way, this indicator is an indicator for mean reversal. I'm going to talk more about that, how to actually capture the bigger trends. Now we're going to use it inside trading view as well. And let's just go to my trading view. So once you know about moving average strategy, right, the next thing is to study the RSI strategy. Now, RSI strategy is also something very commonly used in the industry. And before I continue, right, just want to double check as well. How many of you first time heard about RSI? Can type a 1 in the chat box. And how many of you used RSI before? Right, can type R into the chat box. I want to see the ratio in between. Anyone? Mean that you are first time type of 1. If you have used it before, type a R in the chat box. Alright. Wow, almost everyone used RSI before. Okay, come on. So let me tell you the pro and cons of the RSI, right? Since everyone have used it before. Now, before I talk about the pro and cons, right? Let's go to GBP USD. Create a new market. Now, the pro and cons of this indicator is that when the market is near to ranging, for example, like this one, and then here. Now, over here, what people will do most of the time is that they have actually observed how the RSI, but right, you can say observe throughout the history, RSI is just moving up, down, up, down, up, down, up, down, right? And the upside, the highest it goes is about 80. The downside is about 20. But it is most commonly reached to 70 and 30. Hence, what people mostly do is that whenever it reaches to 30, it will just buy. Reach to 70, it will just make a sell trade. And it's going to be buy low, sell high, buy low, sell high, repeated again and again. So over here, what we can see is that now the market. Let's say that right now the RSI dropped down to here. You got two ways to enter the trade. Number one, you can enter the trade at here, or number two, you can enter the trade at here. Meaning that you can either to buy immediately when it crossed down, or you buy after it had crossed up. One is going to be buying at here, and one is going to be buying at here. A and B. Alright guys, type in the chat box which one that you think is actually a better way to trade, A or B. Meaning A is crossed immediately, B is after you have confirmations. Alright, so you guys say it's B, right? So now this is the place where we get a confirmation. You don't simply buy it for the sake of buying it. You only buy when it has crossed up, or at least being confirmed that it is crossing above the 30 line already. So on this situation, right, you buy. Then the next one you come down further, you can buy again, right? Same thing, you just buy after it cross up. Now, which is here. Is it? Yeah, it is here, right? This candlestick have already crossed up. This candlestick also crossed up. So you can see, if you buy at A or you buy at B, you buy at A and B, both of them are actually kind of similar one, because you buy at A this price, you buy at B also this price, your profit is going to be the same. The difference is that you buy an A, this is your drawdown. You buy a B, this is your drawdown. So actually A have a higher drawdown than B, although they are at the same price of entry. Okay, now when you have a buy, then when would you exit? Would you exit as soon as it has crossed above, like here? As soon as it crossed above, you exit, or after that it have already confirmed the drop down? So this is your C, this is your D. Which one is actually much better? when it have crossed down. So for this part, there is no right answer for this because some people may prefer to close it here, some people may prefer to close it here. Why? Because if you close it at C, right, you can actually capture some profit. Like for example, what if like this? Okay, candlestick like goes all the way up. By at one point, right, at one point the RSI surely reach above 71. If you reach 70, then you can close at the peak. But if you don't close, the market suddenly pull back all the way down. Then you are back in losses again. Hence, alright, entry is very obvious that you need to enter like B. For exit, C or D, up to you. Okay, up to you to decide which one is actually more preferable. But you need to know, it's a big distance later, only you can enter back. Okay, doesn't mean that you can buy, up already exit, or up halfway exit. No, you have to wait until confirmed, then only exit. Okay, need to be confirmed. Another case study is that you sell side. Okay, here. You can either sell here or you sell it here. Okay. This is the sell of A. This is the sell of B. So for A and B, of course, B is actually better, right? Now, this is for robots wise, right? Because for robot wise, the robot can only decide on either A or B. But for human, right, the benefit here is that if it's a human, as long as you can see the RSI moving above 70, keep on above 70, and the price is indeed getting higher and higher, right? Like what you guys can see here, the price moving higher, the RSI remain the same as 70. That is actually a sign of the market is having a strong chance to have pullback. But it's not immediately enter also. You need to see it like a B case, meaning that the market need to be pulled back first. We should not enter as soon as it have a big sharp goes up. Alright. Now, this is RSI. And then when you can exit, you cannot exit at 30 volt. It just come down, pull back up again. Then it sell again, pull back again some more, sell again. Then you can exit at here lor. After it cross down, you can exit at here. Okay, if it cross down, you exit at here. If already pull back, you also exit at here, which is here and here is the same lah. Okay, so you can exit anywhere when you reach to the RSI on the opposite. Now, that is the advantage of RSI. Simple, you just buy low, goes up, sell high, and then whenever it go even higher, you just do the dollar cost average. Now, the downside is that it may not be good in the trending market, like what you guys can see here. Some of you guys said it crossed down to sell, to buy, right? So they can buy here, and then it goes up, comes all the way down again. So you end up to be buying again one more time. Okay, buying again. Then you will be buying again one more time. So you see, this will be your dollar cost average. Your risk is getting higher, higher, and higher. It is able to be profitable, but you need to be a little bit of increment on the risk, right? Meaning in the simplest way, you need to do a little bit of dollar cost average with lot multiplier or with Martingale strategy bit, right? You add in a little bit larger lot size below so that when it pull back, you will be able to be recovered. For this situation, this is the bad side of RSI. And for this situation, this will be the bad side of RSI as well. You can't sell in the uptrend. And almost you can say one thing, right? If the market itself is in the uptrend like this one, if it's in the uptrend, majority of the time RSI will just move above 50 to 70. Meaning that it just move up, down within 50, 70, 50, 70, 50, 70. Hence, in the uptrend, you're hardly able to buy one. If you die there, follow the same rules. You should be flexible, right? Meaning that when it is uptrend already, what you're supposed to do is that to buy at near 40. No need to be focused at 31. Right? Near 40 also can. 50 also can. Okay, just be a bit of tolerate there. Now, if it's in a downtrend like this one, Now, downtrend right here. All right, when it's in a downtrend, the entire market itself will be moving more toward RSI 50 to 30, right? Lower range. So you can't sell at 70, but the best thing is that you can sell around 50, around here as well, all right? Just sell whenever that is possible, right? 50 to 60 is good to sell. No need to wait until 71. So be flexible on the RSI strategy itself. The next thing that I would like to teach you guys is regarding to the optimization on the RSI. Now, this is the RSI indicator that you might know most of the time. Did you know that whenever you have increased the RSI or decreased the RSI, the RSI signal remain the same one? Meaning that from 14, I change to 20. You see, the pattern itself does not change. You put it again up. 14 like this. 20 is the same. 25, same. 30, still the same. Okay, the up and down move is still the same. The only thing that's different is that the highest point of the RSI is being reduced. The peak and the drop is getting lesser and lesser. So let's go back to 14. You see, this one exit, right? This one go out from 30. Now, if you blindly apply, which is just depend on 30 and 70, right? You will end up problem of a lot of noise, right? Yeah, go out so much, go out so much, go out so much. Wow, this is like a lot of noise. You don't know when to enter also. So what you can do is that increase the RSI length a bit, like 20. It is like pull back a bit on it. You go even higher, 25, you filter the noise. 8, too much. So you go to 23. You see, it just touch, then pull back already. Touch, pull back, touch, pull back. Then here also touch, pull back, touch, pull back. In this way, you're able to enter your trade more accurately. And there is no such thing as one setting for every market one. It really depends on that market and you have to tune it accordingly. Okay, so that the noise is lesser, you enter less trade, but most of the trade is being accurate. So this is for the RSI strategy itself. So right now, I would like to share with you guys one robot which is using an RSI to do the trading. What we call as DGV2 Lite. This one, DGV2 Lite. So same thing, I'm going to use it in 30-minute time frame as well. I mean, there is no rules for 30-minute time frame. You can use it in any time frame. I just use 30-minute because it is more faster, as in like it have lesser data. Now, right now, all you need to do is that right now yours is default like this, right? Now, you just need to follow the same, take everything at the side. Okay, from the top to the bottom of the main setting, click the start step stop value, everything inside here. Okay, exactly same as mine. And lastly will be the lot multiplier. Now, later I'm going to explain what is this, but you enable lot multiplier already. All this is like start and stop, everything key correctly. Then click OK, click optimization. Okay, let you guys take a screenshot first in 5 seconds. 5, 4, 3, 2, 1. Okay, so I run my optimization first. Now, over here, what you can see is that this is the RSI value. So how does this robot trade is that it don't use one RSI. It refer to the 2 RSI value. So one cross above 50 can or not? Sorry, one cross above 70, would they sell? No, it need to be both RSI sell together to use it as a double confirmation. Okay, use 2 RSI. And RSI can be ranged between 5 all the way to 40. Now, just I forgot to talk about what is start, step, stop. So start is mean in a number line, it start from here. Stop means the end of the value. And then step means every single step of it, like here. Okay, So in this example, I use a start of 5. Okay, I start at 5. I stop it at 40. We will start at 1, meaning that 5, 6, 7, 8, 9, 10. The reason why I'm doing this is because I would like the system to automatically check where is the right RSI value to enter. 5, 6, 7, 8, 9, 10, bit by bit. Okay. Now, the next thing is the buy threshold. When I will buy at RSI 30. When you will sell, on the opposite directly. And when will I exit my buy trade? I will exit my buy trade on the opposite side, but on 60 only. I would exit at 70 because the market may pull back too fast. So I will exit earlier. But I also don't know that it's the right choice or not. So that's why we do the setting. Ask the robot to automatically find the setting for us. After that, it's about candlestick shift. Now, candlestick shift is same thing. You're having a buy signal here. You shift 1 to be shift to the left hand side and right hand side a bit. Shift 2 means 2 candlestick, 3 candlestick, and then etc. You delay the entry. Okay, you delay the signals. Now, just now moving average only enter 1 trade at a time. Here, the robot is going to do dollar cost average, meaning that it is going to be buy on multiple layers basic. What does it mean? Let's say that you make a buy trade and suddenly market go up, pull back down. Okay, down even further. So here, RSI cross already, meaning that RSI just cross up. Then the robot will buy for you again. Buy 2. Now, it have the stop loss for buy 1. Then for buy 2, it will have another stop loss as well. Every single stop loss contain a risk of 0.1% of your account. Meaning that if you are having $1,000, at most $1 is going to hit you 0.1% losses, which is $1 losses only. Okay, which will be said to be conservative by default. But the thing is that the lot size is going to be multiplied by 2 for every single grid distance. Like for example, buy number 3 is, let's say that you buy over here again. The first lot size that executed maybe is like, for example, is 1 lot. Then the second lot size that execute in buy 2 is going to be 2 lot. And 3 will become 4 lot. It is going to be times 2 by using this lot multiplier value. Technically, I will say that yes, 2 is aggressive. Usually, I just use 1.1 or 1.2. Just slightly increase bit by bit to give a bit of consistency and also to give a bit on the buying when they go even lower and lower. Okay, now this thing you cannot let it continue because 4 becomes 8, 8 becomes 16, and the risk is going to be exponential as well. Hence over here we will constrain it with a maximum lot. The maximum lot here refers to the maximum lot size that you can open. After this, you will just constrain it, and all the trade later it just open at 5 lot only. Now, after that, you're having the cross entry method. So over here you have 1 to 4. Okay. Now what does this mean? For number 1 is as simple as when it cross up, you buy. Okay. When it cross up, you buy. Now, maybe I just draw it up. Okay, it is 1. This is RSI 30. Yeah. It cross up, you buy. Second, cross down, you make another buy. Okay, if this is 2, this is RSI 30. This line is RSI 30. When you set to be 2 and it cross down, you make a buy. Or if you set to be 3, it cross up, instead of buy, for some reasons you can set it to be sell. Or number 4, it cross down, you make a sell. So this is RSI 30 as well. Alright, why 30? Is because of this number. By doing this, right, you can actually test it on multiple style of entry method. Meaning that certain market may be more ranging, certain market may be more trending, right? So a more trending and more ranging markets on these situations, you're able to cater different stuff. Just now you guys said that usually one is the best, but who said that it's going to be best? What if the market is keep on ranging, keep on trending, like keep on down, 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 down? Hence 3 and 4 will be a better option. All right. Now the next thing is about the cross method for exit. Now method for exit is pretty straightforward. Okay, is one will be cross up, close, buy. If it's two, cross down, it will close, buy. Now this one is for RSI 60. Why 60? Because the number here. Okay, 60. This is also 60. And the rest of it is like take profit, stop loss is the same thing. So basically this is how does the DGV2 operates to automatically trade based on the RSI. And in fact, just to let you guys know, this robot is capable enough to pass the Prop 1. So that's why I bring out this robot here, so that you know, okay, how to actually find a setting that can beat the Prop, or how you can find a setting that qualify for your personal account as well. So before I continue, is it clear to you guys? If it's clear, can you type a clear into the chat box? Right? You can type a clear in the chat box if you guys understand what I'm sharing you guys over the robot here. Okay, Lee is clear. Thank you so much. Need to watch this again. Okay, so one thing, if you guys think that I speak too fast, need to slow me down. Because you guys don't type anything, I also don't know that you guys understand or not understand. Right? So I assume that you guys understand what I'm sharing here. Okay. And over here, I just completed my optimization, which is pretty fast. Let's have a look. Now, over here, you can see I'm starting my capital with $10,000, right? My capital is $10,000. And with that said, I am having a profit from here. Let's have a look. The highest profit that I got is 322,000. 322,000, but with a drawdown of 91%. With a drawdown in dollars, that I am losing 58,000 at one point. Is this something acceptable or not? Of course not, right? Too high risk. So you have to lower down the risk. So usually we just scroll from here. Okay, we can look into the drawdown in percentage here, right? You can definitely see one point is that if I scroll down, profit will getting lesser, but the drawdown will getting lesser as well. Meaning that profit and drawdown is always one-to-one thing. If you want to profit more, you got to accept a higher drawdown. Okay, and if you want to be lower drawdown, your profit needs to be accepted to be low as well. So let's just jump in to be, let's say that we set it to be 20% drawdown, right? 20%. Okay, somewhere here. Okay, this is 20%. Okay, 20% drawdown. Let's give a try, double click and run. Okay, the result here looks good, seems profitable, but would I take it? No. Okay, I won't take this one because it's not consistent enough. Drawdown wise is low, profit wise is high, but this kind of result is not going to be letting your emotion feel peace one. Hence, we would like to go slightly different option. Okay, now one of the way is to choose the higher the profit factor. So let's say that I choose 2, just now I choose 1.1 okay, just now the profit factor is only 1.1. Right now I choose the profit factor of 2.06. Double click and run. Is this something looks good? Is this what you guys are looking at? Yes or no? Good, right? So now in a way, I just want to let you guys know why I'm teaching you guys optimization. Okay, in fact, this thing can be done by everyone easily one. Why would I teach you guys this thing? It's because the setting itself may get expired or the market will change every single month. Okay, the market will change every single month. So to let you guys know these things that so that next time, all right, when you come after the workshop, you can still trade by your own. Every single month, you just need to redo the process again, find the new settings, all right, that fulfill your criteria, that fulfill your result. Because your current setting may not be always profitable in the next few months, right? That's something that you need to be aware. How come my tick model is pink and gray, not green like yours? Okay, so when you're using the model, right, make sure that the model here is about, second one, control point. Okay, we all standardize to use control point for now. And from the report here, it should be in mostly green, can have a little bit of gray color, doesn't matter. Okay, mostly green means the result, everything is more accurate. Now mine is accurate is because that I have the data downloaded earlier, which is you can download from, right, take note, tools, historical center, first step. All right, take a screenshot first. After that, go to the market that you are running just now. For me, I'm running on Go. Okay, double click, come in, double click, come into Go, and what time frame some more? Right, just like in 30-minute time frame. Okay, just make sure that the time is 30-minute intervals. Okay, 30-minute time frame. Then you click download and OK. By doing this, you will be able to download the data from the server and then use it for a more accurate backtest and analysis. Alright, so if you are having pink or even red color, that actually means that your backtest, your accuracy is not there yet. Alright, your backtest is not accurate. You have to download the data. Over the membership website here, what you guys can see is that you can see a tab called what does a number in the expert testing means. So if you can see here, the modeling quality, what you guys are having is here. Okay. A lot of pink means not so good. We do optimization every month. How should we decide the period? For example, beginning of 2023, I need to optimize only from 1st February to 28th February. Or we need to do how long back? Good questions. A standard, right? A market standard for this thing is 1 year. Meaning that right now we are at the end of February. So my standard is at the end of February, let's say that this is the first day. At the end of the February, use all the way back to the last year February, just one whole year. After that, moving forward into March, right? Now, March, I can do nothing, right? And then on April, 1st of April, okay, I love to start it at the start of the month. 1st of April, I do it, optimization all the way back to last year April. Then May, last year May, right? This is the period. Now, doing monthly by monthly is very good, right? But then for some people, if you are busy, you can actually do quarterly one. Okay, quarterly does not need to be monthly. Monthly, your result will be getting lesser and lesser over the time, or even some month will be getting some losses. But if you're fine with the risk, then you can just ignore it. Now, what you can do is that if you want to have more chill life, is that you can selective, meaning that you just need to be selecting how do I say it? Okay, so quarter 1 is going to be until March, okay, let's say that I've done the setting until March. Then the second quarter is until June. So you do nothing until June, you just re-optimize again until June. Okay, from June this year to the June of the last year. Moving forward, September is a quarter trade, then you only re-optimize again. And from there, you choose September all the way backwards 1 year later. Okay, that is also possible. And right now, let's open the chart and see how does it trade. Okay, so over here, what we can see is that the robot does have a take profit and stop loss are much better than those that unlimited risk one, because the benefit is that if it's stop loss, you will just close the buy trade at losses. Okay, certain trade will be in losses, certain trade will be in profit. It just want to make sure that you are going to be profit more than your losses. Okay, you can see sell, 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 buy, buy, sell, sell, buy, sell, buy, sell, something like that. Okay, just doing the kind of tradings again and again, again and again. Okay, so over here, let's say that you have these settings. You think it's very good, and you would like to use it for longer time. You do not want to be so constrained and only, how do I say that? Okay, so let's say that just now I mentioned like you need to re-optimize again every single 1 month. And every single 1 month that is going to be like a lot of work if you are a busy person or you are an offshore person. Now that is places where you can activate the seasonal analysis trading. Now seasonal analysis trading you just need to be true first. Okay, let me set first up. True, buy only. 1, 2, 7, 8, and 12. Okay, right now I'm trading in a gold market. And from the study just now, we know that gold markets has the highest tendency to buy at January, February, July, August, and December. Okay, have a highest tendency to buy over this period of month. So what I will do is that I will ask the robot, hey, right now I don't do anything. I just want you to help me to buy January, February, July, August, and then December. Just on this 5 months. Now, after you have keyed accordingly, what you can do is that you can click OK and you can run again. Of course, because it only trade on 5 months only, the number of trade will be much lesser. Still, it will be in net profit. Okay, it will be in net profit. The benefit of this thing is that if you drag it to be longer periods, like let's say, okay, let's just put it to be 2017 until now. Okay, 2017 until now is about 5 years time. Within 5 years, I don't do any optimization. Let's see that how would it work. You see, 5 years, a strategy that can perform 5 years without do anything. What will happen in your own account if you don't use this kind of seasonal analysis? Don't say 5 years, 2 years you already margin call, right? Most of the system itself does not implement this kind of fundamental analysis or what we call as a holistic directional analysis. But if you put in the holistic analysis into place, right, quite easy to be profitable one. Okay, you don't do optimization, you can be profitable already. Now, you might be interested that why it suddenly have a big losses here. So you can open the chart. Okay, just look at this area. Okay, so you can just double click on the place that is losing here. Okay. Now what is happening here? 2021 seems like a black swan event. Okay, so this thing kind of like unavoidable lor. Because before that is ranging ranging. Then suddenly like reach to the support, robot will buy. Now likely that looking at the date, right, this is the 5th of the August 2021. This is due to NFP lah, alright. This is due to non-farm payroll. Okay, when the news come up, the market crash. no choice lor. The robot can just what? Can just stop loss for you. Okay, at least that your thread is being protected.